The Federal Reserve held rates at their meetings 2 weeks ago, and since then, two Federal Reserve governors have spoken out. So I'm going to tell you what this means for the second half of the real estate market during 2025. If you get some value out of this or you like what you hear, make sure to subscribe to the channel, hit the bell for notifications, and if you want to schedule a call with our team to talk about the outlook for the second half of this year and what it means for you, you can do that with the link in the comments. The Federal Reserve, they held rates at their meeting a little over a week ago, week and a half. And after the meeting, this is very unusual, they released a dot plot. And the dot plot is a poll that's supposed to be anonymous of where the governors in the Federal Reserve think things should go when it comes to decision making moving forward. And if you listen to what Jerome Powell said, he continued to hold the wait and see approach. A lot of pressure is being put on him by the folks in Washington, saying that rates should come down substantially, which I don't agree with. I don't think that would be a smart move at all. And it looks like the Fed's going to continue to monitor labor, jobs, and inflation, which is what they've been doing all along. Now, the fascinating thing here is that afterwards, there was two governors, Governor Waller and Governor Bowman in the Federal Reserve, and they both basically said the Fed could have maybe made a decision sooner here. They could have cut rates sooner and are pushing the Fed to make a rate cut in July. So what this means is that they're seeing the data. They're looking at inflation data hovering around 2%. They're looking at where the jobs data is and the unemployment rates remain stable. And it looks like there's some pressure being put on the Federal Reserve decision makers from some of their peers, their governors, to bring rates down and make a cut at the July meeting that's coming up. So whether this happens or not, I'm not really sure. The Federal Reserve has said they're going to cut rates twice this year. We haven't seen anything happen yet. So could there be two rate cuts later this year? I'm guessing definitely one, probably the second. I do think they'll finish the job like they did last year when they made these promises. And it's fascinating to me that you see some dissension among the ranks here. And a lot of these governors, Federal Reserve Governor Waller, Chris Waller said a week ago, Friday, that he doesn't expect tariffs to boost inflation significantly. So policymakers should be looking to lower rates as early as next month. And if you're starting to worry about the downside risk to the labor market, move now and don't wait. So he's saying we've got enough data. Let's make a decision. And most of the policymakers, they prefer this wait and see approach. If you look at what Governor Bowman said, she is favoring a July rate cut if inflation stays low. So you're getting kind of the same message from these people here. There's a wide array of opinions of what should happen next. So what does this mean for real estate? Well, what I'm clear on is that we're at this time of the year where you start to wonder what's going to happen in the second half. And we've seen rates persistently right around 7% or the very high sixes. I'm talking like 6.95, 6.99. I do not anticipate rates are going to come down much in the short term. A lot of the people that predicted 6.35, 6.5 by the end of the year are still believing that. I don't see rates getting lower than 6.5. There could be some movement depending on what the Federal Reserve does. We got to see how the market's going to react and what the 10-year does and all the reactionary market movement that determines mortgage rates because the Fed doesn't set those. I'd imagine we see rates come down a little bit. I'm not clear it's going to be substantial. So if you're one of those people that's waiting for rates, I've got two things you want to think about here. One is, if they do come down, I don't see it happening much based on the data that's out there and where we are so far this year. And when rates do come down, you're not going to be the only one waiting for that to happen. A lot of other buyers are going to be jumping back into the market, which could create more competition. So what I'd be doing if I'm thinking about purchasing and waiting on rates, I'm taking the next 60 days that we have in the summer here and watching the market like a hawk. There is major opportunity during the summertime when people are vacationing, they're checking out, they're going away on 2-3 week trips sometimes. And if you're out there actively looking for housing, you can be one of those people that takes advantage of maybe a little less competition. Now, we did see showings in the spring. They were down about 7% year over year through the month of June. They've kind of stabilized. They're about the same amount of showings that we've seen in the month of June. But inventory's grown. Inventory's up close to 18% year over year in the greater Philadelphia area. So there's more supply. There's about the same amount of demand. And now we've got people maybe hoping rates are going to come down. I'd want to be out there when there's more options and a level demand than more demand and more options. So that's what you really want to think about here, because we don't see prices coming down. Prices are going to continue to rise, and that's obviously very local. There's some neighborhoods and some condo buildings that have different pricing formulas and models happening. But for the most part, we're going to see prices conservatively rise 3-4% year over year. We're seeing rates may come down a little bit. The good news is competition has waned and supply is growing. And that tells me there's opportunity these next 60 days, especially with some of the rhetoric that the Fed's talking about. So there may be a moment in time here before the Fed meets again and rates are stable in this range that you can go out and get the house that you want and compete against a lot less buyers than you would if rates came down. So a lot of strategy here, a lot of market talk. If you need help or you want some guidance, just click on the link in the comments and we can help you figure out what's going to be the best move for you and your household.